Well, they just had a profit announced within the past 30 minutes or 45 minutes on Wall Street, and the stock's up 30% in the aftermarket.
Okay. Have you guys hold on to your Twitter stuff?
We have not distributed a share.
Okay, good.
Are you not?
Not until today. They
Not in the next 3 days.
Okay, so unlike a lot of these other guys, I mean, I know it's Peter that's on the board over there, but there was something about Twitter and their financial performance that made you believe they weren't a Workday or a Fox.
Yeah, I mean, look, if a media play can be highly leveraged because the incremental cost, if you can serve more users, is not that high.
Right.
And so, to the extent that you cross the threshold where your revenues are growing faster than your consumer base, which should be easy to do in those types of companies, it should be wildly profitable. Right. And the company had been spending quite a bit of money on the infrastructure side to put it into the fail whale, if you remember those days, which was put the whole company at risk, I would say, the number of times it was going down. And so they put a lot of money, a lot of CapEx, a lot of engineering dollars into making sure that problem would go away. And that then pushed the break-even point higher because you had to scale in it. But I think it was the right move.
So part of the thesis of my book, and it was we took a historical perspective on, basically it said that every great commercial boom was always built on the back of financial mania. And at the beginning of the cycle, we get so excited that we overfund, and then things blow up, and then all the real value is made after the bubble behind that first. Okay, so and I think our statistics, which has turned out to be low, is we said that that after the bubble burst, 80% of the companies that would be associated as the great companies of the internet would be founded after the bubble burst. Okay, and a lot of that. I mean, in the bubble days, we were trying to figure out how many pet stores we could put on the internet, and only to find out the number was 0.
But you're seeing more stuff like that. So one marker of, once again, not trying to be negative, just kind of calling it like I see it. One marker of a bubble is people are more speculative. There's just this notion of discounting risk. And I'm seeing more companies attempted that are just minor variants off of something else as opposed to being holistically new. And similar to, 3 pet food companies or whatever being funded. It feels more like that today than it did. Anyway, where were you going?
Well, what I'm trying to do is, weirdly, when I looked at my book, there were only, at 99, there was like only 265 million people on the internet. Now there's 6 billion.
Yeah.
Okay? Now one of the things I want to get to is the whole, what I call the Uberization of society. So in other words, we overfunded, but there's 6 billion devices connected to the internet right now. The real question is, sure, there's going to be bubbles. Sure, there are going to be these box.nets that are
Pushing
the limit and have upside-down business models and whatnot. But given the maturity of the internet and how much these companies like Uber are transforming society, it seems to me, it's still a gambler's game. But they're going to be. It seems like we have a bit of a run in front of us. Again to tap into this smartphone, to the sharing economy. It's really reinventing.
To a certain extent, I think these things are decoupled, which is, there's going to continue to be disruption, and there's going to continue to be innovation, and that's going to happen almost irregardless of the cycle. I think the way that our industry is structured is very likely that you're going to have these cycles because the way money comes in and goes, it comes in really slowly, it goes out really quickly, and as a result, you end up with this type of behavior. But make no mistake about it, I think there's 2 major trends. The move to SaaS computing is really powerful because the venture industry spent 30 or 40 years cramming computers into enterprises, and they'll spend the next 20 yanking them out. And that's profound change, and it moves dollars in dramatic ways. And that's been a very real thing. I just think people are taking on more risk and more competitive because the money's there. If two companies both raise $100 million and they want to compete, and one of them's going to take on a big burn to try and win. It's just kind of the nature of the game. The other one, what you're mentioning, is the smartphone. The smartphone is an insanely amazing embedded platform, basically. So prior to the smartphone, if you want to do what Uber's doing, you call up Wind River, right, and you get an ODM, and you build some custom box that's probably got a BOM of $1,200, and you have to go around and get somebody to install it in the cars. Like, it's just ridiculous the amount of work you would have to do. This embedded device comes with GPS, mapping. Those two things are integrated. You know, unbelievable data rate, easy programming tools, you know, on top of both platforms. It's unbelievable. And many people carry their own, so you don't even have the marginal hardware cost. So now, if I want to build something like Uber, or, I mean, you could theoretically, you know, organize the world's doctors, or, you know, there's all kind of things you could think about where you have an embedded system that now could connect, you know, across a lot of places, while people are not at a desktop, but anywhere they are in the field. And that is a remarkable playground for entrepreneurs. And that's what launched Uber, right? Which is this profoundly efficient and cost-effective embedded system platform.
Right. So I want to riff on that, but I want to first go back to the first opportunity that you see, the whole SaaS market. So we had Josh James here earlier, and he's saying, you know, only 5% of the data on the planet is even lightly analyzed, and that data is going up, you know, 10x by 2020. So isn't there an opportunity now that all of our behavior is out on the internet to build a bunch of data?
Yeah, and I think what's tricky is, you know, you can drown someone in data, right? And so what's tricky is how do you make that actionable in a way that where you get some kind of Pareto-optimal trade-off, where you're getting a bang for your buck. And we're an investor in Domo, and we're also an investor in a company in New York called Sailthru.
Right.
And what Sailthru does is
another top 250 company.
They help large publishers, e-commerce providers, travel companies personalize. And what they do is very simple, which is almost everyone has metadata on what they're selling. And so, or if you're a publisher on your articles, and as a user interacts with your website, that metadata rubs off on the user and creates a personal fingerprint. And then when you turn around and want to do an email communication with them, do recommended products alongside your other products, those types of suggestions, other articles to read, this system powers those in a customized way. And for publishers, they're seeing 50 to 100% lifted page views for e-commerce providers, like a 30%. But it goes to your big data because it's taking a smart subset of the data and then turning around and making it useful very quickly. Because what I do fear is that we get drowned. Like, you could just, you know, collect data all day long.
That's part of the whole, I mean, I'm sure when big data companies come to you, you're kind of saying, are they somebody that's going to drown somebody, or are they going to create?
Provide signals.
And there's that's where the real added value comes, right?
Yeah.
Okay, so back to, and by the way, Bill writes a great blog. He occasionally blogs, not enough, but it's called Above the Crowd, so be sure and check that out all the time. But you had a great piece about Uber, and you're really responding to a post by some professor named Oswald Daran, whatever, who made, sorry professor if you're watching.
I talked to him before I published.
Okay, good. And you know, it was very thoughtful, and you weren't arguing with the fact that he came up with a valuation, a true valuation for Uber for $5.9 billion, which, you know, I don't think it's that shabby. But you're at $17 billion, and you were really arguing other than about the specific valuation, but you were saying that he had misinterpreted two things, both of which I think are really, really important things to kind of think about as we look at other Uber-type opportunities. So the first one was you felt that he had grossly underestimated Uber's total available market.
Yeah.
Okay, so let's riff on that. Maybe tell us.
Well, part of the reason why he was uninformed was he's never used the product, which he admitted in the blog post, which is problematic, I would say, because 538 republished it. You know, it's just not good hygiene. I don't know why, but what he basically did, which is a classic error, is he added up the historic limousine and taxi cab market and said that's as big as this could possibly be. So he used history as a lens from which to judge a new product offering. And I included in the blog post a famous story where AT&T hired McKinsey in '79 to estimate the size of the cell phone market, and they came back with a number of 900,000 units. And partially because they just said, how often will someone not have a landline nearby? Like, they just didn't think about the fact that you would grossly change convenience, ease of use, these kind of things. And he made the same mistake. And you know, for someone that lives in San Francisco, you're starting to see use cases that are dramatically different than taxi and limo. So one, the price point's below taxi now in most markets, sometimes by as much as 30 or 40%. So it'd be weird to not expect some kind of price elasticity. You know, we're seeing, the one I pointed out for him, it's kind of a no-brainer, is a rental car alternative. So when I travel to Seattle and LA, I used to get rental cars. I don't. And it's a much better experience. And you know, there's a 30 minutes in that silly shuttle van out to the parking lot, and you get to pay for work, and then you have to, you know, have the location directions, and then you got to find a parking spot, pay for a parking spot. The hotel's going to charge you $20 for parking. Well, you don't need to do any of that. And so that's dramatic. And you don't have to get in that little shuttle on the way back. The North Shore shooting us. So, and then, you know, the big kind of aha, there's a lot more in the blog post if you want to read it, is I have several friends in San Francisco that have gotten rid of their car, which if you start to think about replacing car ownership, all of a sudden, you know, the car ownership market's like $3 trillion worldwide. It's like, you know, 2 or 3 orders of magnitude larger than the historic limo and taxi market. And there were other data points that I pointed out to him, which is Travis has already said publicly that Uber is many multiples bigger in San Francisco than what was the total of the limo and taxi cab market.
So I came up with an idea for babysitters online. Well, you could get babysitters that could also like teach your kid Spanish or how to play the piano. If you could do that, I would probably get babysitters and still stay in the house. Right? So you know,
well, so there's 3 venture-backed babysitter networks. One in San Francisco called Urban Sitter, and Lynn, who runs that, is a very, very smart CEO. So you should give her the idea.
Okay, because think about it. Then you get.
I
pay more money.
I think they little. I don't know about piano, but I think foreign language support is already in the choices.
So you know,
you can get someone that
because
speaks
I
particular.
think, you know, part of the success of Uber is the whole trust issue, right? So you're rating the driver, and the driver's rating you.
Ask next time you're in an Uber. Ask, especially around here. Ask them how many times they've taken kids to like a soccer game or something. Like, it's going like this. And that doesn't happen unless a parent's putting their child in here. Talk about trust and safety, right? That's a lot of trust and a lot of safety.
But you know, so the point here is that the total addressable available market was.
If you materially change the offering, which I would argue you've done, the TAM's not going to be dependent on what it was historically. That's kind of the function.
So
the second part of it was he does not believe there are network effects present. So he said the most market share they could ever get is 10%, which is also odd because in San Francisco, we're 3 or 4x the historic limo and taxi cab market. It's hard to pull that off if we're 10%, because that implies this new market. But actually, those two arguments are kind of at odds with one another, because, but he's wrong about that anyway. There's a strong network effect in it.
So hence, you believe that Uber's worth $17 billion?
I did not actually say that.
I know you did. I was trying to get you to say that.
But
So will you say it?
six very smart investors who took a look at all the data came to that conclusion. Very respected investors.
Yeah, rumor was John Doerr was trying to get in on that.
He was one of the 6. He did
Last
get
part
it.
of the leg.
He did get it.
Yeah, just kind of a turnaround there. So, now, part of my view is that model, I call it the Uberization of society, because I think Uber is probably the king of the sharing economy, or Airbnb maybe,
Yeah.
right?
I mean, someone, I forget, wrote an article that compared the two, not that that's a useful exercise because they're different companies. I think the advantage that Uber has is frequency. All things being equal, you'd rather engage with your customer on a more frequent calendar than an Airbnb provides.
So, I'm sure you have other...
Airbnb has less competition. So,
Right, but they're expanding the addressable market.
sure,
Right?
absolutely.
Which is another great example. So the good professor needs to use Airbnb as well.
All right.
So I'm sure you have other examples of Uber-style companies in your portfolio?
We do. I would offer one word of caution, which is you could sit here and say, well, I'm going to put a layer or a marketplace on top of almost anything. And I'm not convinced that all markets are susceptible to fast disruption because of the layer that you put on top. And I wrote a blog post called All Marketplaces Are Not Created Equal. And you just have to get in and understand whether or not the network layer adds a tremendous amount to the value proposition. So, I spent 15 years working on OpenTable, which is part of why I was kind of open-minded to Uber when it came along. And in that case, all of a sudden you could search 500 restaurants for availability in a few milliseconds. Well, that's pretty cool. That's changing the consumer value proposition in a dramatic way. Other things like ZocDoc, okay, I can book a dentist, or I can book but it's a one-time transaction, and then I kind of want a monogamous relationship. But with restaurants, you always want new, so you keep going. And it's just a different dynamic, right? In Uber's case, by putting a layer on top of all these cars, I all of a sudden make all the cars my car. And I get the whole efficiency of the network for me.
Right.
And that's dramatic. But it's just not clear that if you put a layer on top of, all the oil change shops, that it has as dramatic an impact.
So one of the reasons that I think Bill is one of the top 5 VCs is because you're a gambler. I mean, I think in your business, it's a lot like gambling. And so when you invested in Uber, it was a limousine-driven service. I'm going, damn, Bill is investing in something that only guys like him use.
Oh, that's great.
So I was a little worried about you. And plus you paid $60 million, wasn't it, or something?
That's the post money, yeah.
That's the post money. So now you're at $17 million, you did pretty well so far. But I think that, would you agree, though, that the service industries in general are ripe to be Uberized? And in the backdrop of this is basically a restructuring of the way business works. So as an example, I have buddies that I grew up